I mean, we've seen record highs in the US just as missile tests happen in Russia. Are the markets being over bullish?
I think a little bit of a relief rally. There's a huge sense of relief and perhaps a little bit of uber-bullishness in the markets at the moment. But I think what is really clear is that while the US seem determined to impose trade sanctions, they're not necessarily getting a bilateral agreement in relation to the Eurozone. Obviously, Germany would be the main conduit there between Russia and the US. And of course, Angela Merkel would not want to sour relations because the alternatives that the Eurozone have in terms of energy supply are limited, whereas in fact in the US they wouldn't have the same problem. So from that perspective, it does seem that the US are maybe on their own there, and unless they get the Eurozone on side, it does appear to be a little bit bullish for the markets, and that there'll be a different way of doing it.
So what do you guys do? Do you sit on the sidelines and wait and see what happens, or are you braver in getting into these markets now?
It's been very difficult at times, to be perfectly honest with you. Obviously, we were expecting a degree of volatility, and of course, Putin's speech yesterday was attempting to soothe the markets. But if you break it down, he did say that he saw no need for military intervention, but there was always a possibility. So I still feel that sentiment is very, very vulnerable. And of course, we have a lot of event risk later this week and today, of course, which could actually send the markets to the downside. So from that perspective, I'm inclined to sit on the downsides, but certainly I'll be lowering my position size.
I mean, it's been a while since we talked about real economic data. We've got ADP today ahead of the non-farm payrolls on Friday. How critical could that number be? Of course, we've got the PMIs as well. We've got Draghi tomorrow.
Indeed. I think there's a lot of concentration on the ADP numbers, and there's obviously seen to be a correlation between that and the non-farm payrolls. And yet, if you look back over the last year, it has been correlated for about 9%. Over the last 7 years, it's been correlated around 13% of the time. So from that perspective, I think it's something of an outlier. Nonetheless, it will more than likely be the market move for today, and of course, people will believe that it will be a precursor for what happens on Friday. Anything lower than 151,000 in the non-farm payrolls on Friday will be problematic. I think another miss on the non-farm payrolls will add to the vulnerability of the markets here, and of course in the US as well. Sure. I think the last few times we've had misses, we have seen severe volatility, and yet we've recovered.